Hello, fellow traders. Welcome back again. It's Von C here with the trading channel. So today I'm just going to talk about candlesticks and open, high, low, close bar charts. So as you know, I'm not a broker, and whatever information I talk about here does not constitute trading advice. So do your own research. You know the usual score. So I'm just going to make this as simple as possible so that you can understand it. But I've got quite a number of slides I need to um, go through. So if I'm too fast, just stop, think about it, play again, that sort of thing. So the first one here, when we're thinking of candlesticks, what exactly are you thinking about? So you need to start thinking about the sellers and the buyers. So here, what we're talking about, what we're thinking of, is the buyers versus the sellers. So the buyers will push the price up. So just think of it in a logic manner. Don't try and get this complicated. So just remember it's the buyers versus the sellers. And the buyers would want to push the price up. The sellers would want to push the price down. So when we push the price up, it's bullish. And when we push the price down, it's bearish. So don't think about too many things or else you'll confuse your brain. Just think of price going up, price going down. So these candles or those bars is just the buyers and the sellers fighting against each other. So this is a very nasty battle. It can be quite fierce or it can be quite friendly. So just think of that. Don't think of many other things. So this is what we're looking at. So these candlesticks are representing the buyers and the sellers fighting. Some want to buy, the sellers want to sell, the buyers want to buy, push the price up, that sort of thing. So you need to start thinking as well, are these trending or non-trending candles? Is there some continuation of the pattern? Is it reversing? How many candlesticks are involved in this? And what's the rationale? What's going on? So the first one now, we're going to look at the candle anatomy. So with the candle anatomy now, you need to look at this. It's got a body, it's got some wicks. Some people call them shadows. So in this presentation, I'll just call it wicks. So now you need to look at how big this body is. Is it a short? Is it a small body? Is it long? The wicks, are they long? So the wicks will represent the price range, the low to the high. So if a stock is traded between 5 cents to 20 cents, so that is your range. So the 5 cents is the low, the 20 is the high. And then the body will represent the price at opening and the price at close. So that was the range, but maybe the stock opened at 6 cents and dropped a bit back, then came back up again, then maybe closed at 15 cents. So that's your body. So you also need to look at the color. The color, is it red? Is it green? So we know our green is bullish, our red is bearish, but some charts use white and black. So it depends what you're using. So you want to look at the direction of the price movement as well. So that's just showing you the candle anatomy. It's taken me quite a bit to put all this together. So now we want to look at the candlesticks. You know, I've already discussed that, the body size, the position of the body, and where does it close? That's very important. Is it closing on the higher end of the wick or on the lower end of the wick? So you need to be looking at that as well, the length of the wick. You know, is it long wicks? Because these long wicks will indicate high volatility. Oh, there's a misspelling there. It will be quite volatile. So yeah, it's correct. Sorry, it's me trying to talk too fast. Anyway, bullish and bearish again, the wicks ratio, the body and wicks ratio. So you want to know these wicks, is it making the MI too volatile or not? So you need to be aware of that. And so here we are. So I've got some candles sticks there as an example. You got sizes of the body. You got big bodies there. You got quite a big bearish body, which you can see there, which is red. You got quite a big bullish body there, which is green. You've got the first one there is just showing you the bullish small body though, but it's actually showing you that the price was pushed down by the sellers, but the buyers brought it right back again, and that's why the body is right there at the top. And then you've got the next one, the second one, you've got a bearish body there. You know, buyers try to buy it, but nah, sellers say no, not today. we're going to bring this down. So you need to understand that. So just remember the buying pressure, the selling pressure. So it's the buyers, the sellers, they're fighting. And then the fourth one there, you can see some indecision. You know, they both pulling that end. So it's now just, just there in the middle. That's the indecision one there. So you just need to think more of buyers versus sellers. The pressure, is the price high up there? Is the price at the bottom? So these colors, the bodies will show you, what's going on. So you just need to read it that way. Keep it simple. Right. So you need to ask yourself, is it a large body? Is it a small body? Are the wicks long, short, that sort of thing? Is the body, what's the body's position in relation to the wick? Is there been an announcement? Is there any news? Because as you know, the market will move depending on the news that's announced. So you need to look as well. So sometimes people talk of gaps. Is there gap down, gap up, that sort of thing? And what's the impact on that? So you're not just looking at the wicks and the body. You need to know what that means. So sometimes patterns are formed, sometimes they're engulfing bearish patterns, the piercing line. You've got, all that listed there. I've got quite a lot there. You've got the dark cloud pattern, you've got the hammer pattern. You need to know what all these things mean. The list is quite endless, to be honest, but I think at the end of the day, it all depends on how you interpret these things. So you need to know, because if you start going to cram all these patterns, your mind will explode. So in this as well, I'm just going to give a few examples, because it's just going to be a long presentation. You've got the shooting stars, the hanging man, you've got bearish meeting lines, you've got the evening doji star, so you just need to understand, basic how to read these candles and what they form and that sort of thing. You've got this upside Sasuke. I can name the whole long list, but it's too long. Bearish separating lines, that sort of thing. So is the pattern continuing? Is it neutral? How bad is this battle? Is it a friendly battle? Is it really fierce? Because the wicks will be quite long, that sort of thing. So you need to be looking at that. And, was it quite nasty? Is there bloodbath? That sort of thing. So you need to look at that. Is the indecision? So as well, you need to look at your support and resistance line. If some of you don't know what this is, so the support line, which is always horizontal, the buyers expected to buy far much more, and the resistance line, which is also horizontal, sellers are expected to push the price lower. So the how simple can I put it? So there is some resistance there. The price is being pushed down. So that's the resistance there. There's so many indicators to use, plenty of them, that I'm not going to, talk about them in this presentation. There's loads. So use what works for you. So do your research, see what works for you. Important as well, watch the volume. The volume will tell you quite a lot. Check your announcements. Check the news. See what's going on around you. So now we're going to start with the candlestick patterns. I'm just going to talk about the patterns now. Is it reversal pattern? Is it a bullish reversal or a bearish reversal? Is it a continuation pattern? Is it a bullish continuation or bullish or bearish continuation? Is this a neutral pattern? That sort of thing. So you need to look at these things. So candlesticks, again, the other thing is blending. You can add them all, you can put them together, then it forms, like the example I've given there. So you have to take the opening of the first candle and the closing of the second candle, and that's how you put them together to give you a meaning of what it means. And then I'm going to give you the first example, a candlestick, which is showing a reversal pattern. So this is basics. We all need to know these candlesticks, because these are the basic things you need to know when trading. So you've got one there, which is so what I decided to do is put the opposite of each other, which you can see there. If you're not a beginner, you probably know what I'm trying to say. So you've got a bullish hammer, which is a bullish reversal. So this bullish reversal pattern, the buyers are in control. We've got the hammer there. You can see that the sellers tried to push the price down, but the buyers came over. They came quite strong and pushed it right up. So there we are there. So this is a signal for an uptrend. Then we've got an inverted hammer, which is the buyers are actually weaker than the hammer pattern. because as you can see, the body is at the bottom of the wick, and the other one, the body is at the top of the wick. So this is a bullish reversal uptrend. So this normally happens when the price is going down. So when you see this, just know that the price was going down, and then now the price is actually going up. Then you've got a bearish reversal pattern. The bearish reversal pattern, you can see you've got a shooting star and a hanging man. So with the bearish reversal pattern, you've got sellers that are in control. Buyers try to buy it all the way up, but the sellers pushed it right down. So this actually happens when the price is going up. But then when the shooting star comes or the hanging man, it just tells you that the price is going down. So that's what it means there. So it actually signals a downtrend reversal. So with the hanging man, it will show you, well, it shows that there's some resistance and the market is at its peak. So with shooting star, you can see that the body is at the bottom of the wick. So this will signify that the sellers are a lot stronger and they are really selling it down. And then the hanging man, as you can see, the body is at the top because of the candle. The sellers are actually weaker there because it closed at the top. So these are the things you just think, don't think too much about it. Just try and think in a very simple manner, because if you think too much, you'll confuse yourself. And then the next one, we've got the bearish candlestick pattern. Well, this is example number 2. We've got the bullish engulfing pattern there. So it's a bullish, so bullish, so it should go up, price should go up. So you can see the first little candle there is the smaller body. It's actually bullish, it's red, it's been engulfed by the green big candle, and then this pushes the price up. So the price was going down initially, and then the buyers came and pushed this price up. So this is a reversal pattern which signals an uptrend. Then you've got the opposite of it, which is a bearish engulfing pattern. So you've got the price was actually going up, but then the sellers came, took over, engulfed that bullish green candle, which you can see in the dotted line, and they took over, and boom, the price went right down. So that's the downtrend there. And then the next one, you've got the bullish reversal pattern, and the example I have here is a piercing line. So here the buyers ended up gaining control. So at the beginning, the price in the dotted line was coming down, and then the buyers came over, they filled that gap, and they pierce right through. You can see the blue line there. They pierce right through, and it's just signaling an uptrend. So they just, bought and went right up. So you can see there's a price reversal there. Then the opposite of that, you got a bearish reversal, which is the dark cloud. So this is the opposite. Buyers were quite happy buying, and then the sellers said no. Sellers came, pushed it right down, pierced through, going downwards. That's the dark cloud, and the downward trend continues. So that's a price reversal candlestick there. And then you've got example number 4. You've got morning star and the evening star. You can clearly see, oops, sorry. Okay, my closing and opening, sorry. Just ignore those O's and C's there because I forgot to move it around. So you've got the morning star there. You've got buyers gaining control. So it started off with the price going down on the left-hand side on the morning star, and 3 candles involved. So this is another thing. So we started with 1 candle. If you can remember, we went to 2 candles involved. Now we're on 3 candles involved. So just know which candles are for which patterns. So now the morning star, 3 candles are involved there. You've got a bearish one. Then you got 2 bullish candles in that rectangle there. So initially the price was going down, the sellers were in control, but the buyers said, no, not today. We're going to buy this up. And they came over and they actually bought that. So you can see that there. And then the evening star is the opposite. So think of the morning star as the star rising, going up. Evening star, think of a falling star. Hopefully it doesn't fall because we're all going to, end up somewhere else. So anyway, so think of it that way. So you've got the price going up initially with the evening star, but the seller said, no, we want to exit. We want our money. We want a bank, like what's going on at present on the market on the ASX. So the sellers came and reversed that uptrend into a downtrend. So that's your evening star. So just think of it in a simple manner. I know It may sound complicated at the beginning, but if you think too much, trust me, your head will blow up. So just think buyers, sellers, bullish, bearish, green, red, that sort of thing. And now we're going to look at reversal patterns. This is number 5 again. So I'm going to give 3 white soldiers and then 3 black crows, the opposite. So the 3 white soldiers, again, you can see price was coming down. So we've got 3. If you look at those soldiers in the square, so that's why they're called soldiers. Well, they're 3 anyway. So soldiers winning, wanting to go fight, wanting to win the battle. So the buying pressure is up. Initially, the price is going down, then these soldiers come and take over, they fight, they want to win this battle. So there you go, the bullish reversal pattern. So this causes an uptrend. So there you go, those are the 3 white soldiers. Opposite to that, you got the black crows. So these black crows, as you can see, price is initially going up, but then the sellers come, probably think of these vultures or something. So they come and they take over, they start selling down, pressure is on, and the price goes down. So you can see there are 3 of them in there. So think of it that way. And the number 6, I'm just going to give one example of a continuation pattern because we're going to go on and on and on about this. So there's quite a number of continuation patterns as well. There's bearish on neckline, bullish on neckline. You've got bearish mat hold. You've got a bearish neckline. So these ones have got 5 candlesticks. So as you can see, the ones I've given, 1, 2, 3, 4, yes, it's the rising 3 method and the falling 3 method. So yeah, it's a long subject, to be quite honest. So you've got a rising 3 method there. This is a bullish continuation whereby the buyers are in control, selling. The sellers try, the bears come and sell this down, but this is not happening. The buyers come in full force and say, no, not today. And they continue buying right up and the price continues going up. So it's actually rising, as it's saying, rise. And then you've got the falling 3 method. So in the falling 3 method, it's a bearish continuation thing. So at the beginning, the price is going up, buying is going up, but then the sellers say, no, we want to take our money. So we're just going to sell whatever price. I'm selling this today. I'm not staying in this. So you've got 5 candles there involved. You've got 2 of the bearish, 3 in the middle, which are your bullish bullish candles. So sellers come, they sell this right down, and the pattern continues to fall. And this is a downtrend. So the market starts, crashing, that sort of thing. So these are just patterns to maybe help you when you're trading, if you can identify them. But sometimes and I'm sure most traders always want to wait for a confirmation candle because that actually helps. And now you know where exactly, the trend is going. So neutral patterns, we've got neutral patterns. You have, sorry, somebody came in here. So neutral patterns. So these neutral patterns, so I talked about continuation patterns. I talked about reversal patterns. So now I'm going to talk about neutral patterns. With the neutral patterns, as you can see, price can go either way. It can go up, it can go down. So you've got the spinning top. So you've got your body right in the middle of the wicks. I put a red and a green there. You can see that. Second one, you've got a doji star. Well, the opening is just equal to the close. Nothing has happened there in this battle. To be honest, the buyers and the sellers are just watching, thinking about it. Then you've got the doji, a butterfly doji. So you can see that what happened is the price was pushed down, that T shape, the price was pushed down, but eventually the buyers, the price was brought back up again. So the bulls eventually won. And then you've got the opposite of that, the gravestone doji. The price was pushed up by the buyers. They tried to buy, but the sellers kept selling. They brought it right down. And this is a gravestone doji, and the bears won. That's what it means. Then you've got a long-legged doji. So this shows a very fierce battle. You've got the long wicks there. Yeah, the top and the bottom. So battle has been quite fierce there. Then you've got the full price doji, which shows the opening, the high, the low, and the close being at the same value. So not much has happened there. There wasn't much of a battle happening, to be quite honest. So here's a good example here. I just took this screenshot today. This is RN, which stock is this one? Sorry, CAE. CAE gold stock announced some, I think something to do with the gold grades or something. So you can see right at the bottom, we've got a very big body green candle followed by another big green candle. Candlesticks I was trying to show you before. So that big long bullish candles just showing the price is going up. Price was pushed right up from like 5 cents from what I can see there to almost 13 cents. And then big sellers came, big red candle, as you can see. So you can apply what I was just trying to say to you, you know. So I can see even already there, I can see some dojis, quite a different types of dojis there. So you can actually look at that. So this is what I'm just talking about. So it's the buyers versus the sellers, the red candles, the green candles there. So that's what it is. So that's why I put it there. So here I've got some Doji and Price rejection examples. So you can see a very long wick there, which is right. You can't miss that red candle, the biggest candle there. So you got that long wick there showing you some price rejection. So it's right there. And then you move on, you can also see some indecision going on, some long-legged dodges there. You can see some gravestone dodges and butterfly dodges in there. So that's why I put this. But as well, you're supposed to look at the volume. As you can see, you got volume there. You know, so you see at the beginning there, company made an announcement. Buyers started buying. Of course, sellers came eventually. But this is the most important thing. You can't just trade, you know, looking. You need to at least look at the volume. There are so many indicators out there, you know, whether it's the stochastic, whether it's moving averages, so many. The list is so long and gets complex. See what works for you. So here it's just showing you some of those patterns I was just talking about. So you can see that. So you can see, you know, some indecision going on there. So yeah, so you can see reversal patterns. There'll be some continuation patterns there if you look closely. So that's what it is. And then here, there, you can see something that looks like a shooting star. You can see it on E. So on there on E, you can clearly see that there is one there and the price started falling. So there's no reason why, you know, if you see that, you can't sell. On A, you can clearly see that this is a 1 minute chart for FFG. You can see the stock was being bought right up, and you can see the high volume there if you look at the bottom as well. And when it was being sold down, you can clearly see the high volume of sellers coming through. Then eventually, of course, there was some indecision there, small bodies coming and traders thinking, okay, should I buy, should I sell, that sort of thing. So just think of it in a very simple manner. And then now you can, I've got another example here of clearly you can see where you would have bought the stock and sold the stock, because you can see the green right going up, that biggest long red candle. Of course, hopefully you would have exited there, because if you didn't, then something else, you know, you just have to wait, I suppose, to unless if you're in long term. I'm not saying every time you see they sell, because sometimes we're in long term, we don't care what happens on the market. So that's RNU graphite stock. So we don't care what's going to happen, because we're thinking EV, we're thinking, you know, what are they doing? So we just ignore the noise and we hold the stock. So that's just an example. There was some selling pressure which happened, but now stock is going up. I think it went up to 8.3 today. So this is just for, you know, illustration purposes only. Then you've got here, you've got a stock, this is Crow. So Crow, you can see at the beginning right there, but there was a big gap up, you know, from the first candle to the last one, high volume there, you know, very large bullish candle, and sometimes, and quite a long wick there. This can actually illustrate volatility. So there's quite increased volatility there. So sometimes you think, should I get in, should I not? As you can see, it's followed by a very big red candle, bearish, 1, 2, 3, bearish candles. Sellers came through, started selling because this price was rejected right at the top. You can clearly see that. So you need to be very careful. So just know what your wicks show there, the size of the wicks in relation to the body, how big is the body, that sort of thing. You got three big sell candles there that if you didn't sell, then there would have been a problem, because, and well, unless if you're long term, like I said before, and you're hoping the price will go up again. So now later on, you can see price just fluctuating between a certain range. I've highlighted that in yellow. You can see many dojis, you can see different bodies there, whether it's green or red. So I've put this to just show you what we're talking about. And then now we're going to go into bar charts. Open, high, low, close. So we'll just pause and think about it. So this is another way of looking at the charts, interpreting what's going on in the market. So we can see it's the same as before, except that now we've got bars. We don't have candles. So just breathe, breathe, breathe. Just forget about the candles. Now we got a new topic here. So we've got so this bar on the left, it will show you that opening. On the right, it will show you the close. So the range still remains. We've got the low and the high again. So you need to know the position of these bars, the close and the opening. Where are they on this straight vertical bar? Because this is very important. You need to be watching the volume. So we'll keep it simple again, very simple. So here we are. So we've got the buyers, bulls, okay, bears, same thing. Right, so for example, we've got, which stock can I give? Okay, we'll just stick to maybe RNU. So RNU opens low. You can see where RNU opens. Suppose RNU opens at 5 cents, but then it closes at 8 cents. So the open will be 5 cents, the close will be 8 cents. So this actually tells you that more buyers came through, so the bulls were in control, there were more buyers pushed the price up. So you can clearly see that the bulls pushed the price up, it went up. So for example, if, which stock, okay, FFG opens maybe at 30 cents and ends up, so you can see the opening at 30 cents, which is higher on there, 30 cents open on the right, photo there. And then opens at 30 cents and then it closes at, say 15 cents. Well, that won't be the middle, maybe 5 cents. So it closes at 5 cents. So here many people were selling. So you can see that the opening is actually higher than the close. So sellers were in control, the bulls were selling. On the first one, RNU, you can see that the bulls were in control. The buyers, they opened it at 5 cents and they managed to close it at 8 cents. So just think of it in a logical manner. Don't try and complicate it because your brain will explode. Let's see here. Okay, next one here. Uptrends. So now the way you look at this thing, right? So as you can see, I put an example there. You've got the green bars. So when there's an uptrend, you can see that the first bar, the second bar is opened higher than the the first bar. So you've got high highs and higher lows. So if you look at the candles there, you can see a trend going upwards, but then the highs and the lows, every time they're opening higher than the previous ones, the next high is opening higher than the previous high, and the next low is opening higher than the previous low. So that's why it's higher highs, higher lows. So you can see that. So this is a good example of a stock, AJL, which ran on Monday. So you can see that clearly there. And then you can see that when it reached the top there, the reversal started. Because after that a green bar, you can see the red bar that follows had a lower high than the previous one. So we'll get to that. So there we go. So higher highs, higher lows versus lower highs, lower lows. So here we are. We had green bars going right up. We had higher highs, higher lows. So we got that red candle. Price was pushed right up, but the sellers came and they sold it right down. So now the reversal starts. You can clearly see now the following candles. We had lower highs and lower lows. So the previous candle, the higher was high, and then the next one that came, the high was lower than the previous one, the low was lower than the previous one. So just try think of it. Sometimes you may think, oh, higher high, low, 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 high, that sort of thing. So just slow down and think about it. Think about what I'm trying to say. You can pause this, play it, write it down, think about it. So now here we are comparing downtrend and the uptrend. That's what I was just talking about there. The uptrend, you can clearly see we've got higher highs and higher lows. The highs of the previous bar are higher than the highs of the next bar are higher than the previous one, and the lows of the previous bar are less than the next one. So the lows of the next bar are higher than the previous bar. So high highs and high lows. So you've got another one there. Put it in as an example. You've got lower highs and lower lows. So you can clearly see what's going on there. So don't think much about it, because don't get yourself confused. Yeah. So here we are. You got a big red candle. That's what happened there. So that's just showing you increased volatility in the market. So just remember that. So if you see that red one, you maybe start thinking, should I exit, should I sell, or should I just watch this stock and see when it's going to settle? So that's that one. So just another example here, same one, high highs, high lows. You can see volume there. Sellers, you can see sellers volume, buyers volume, that sort of thing. You can clearly see what's going on there. So that's just another example where stock was going right high with the higher highs, higher lows, then eventually started coming down again with the lower highs and lower lows. So yeah, just think in a logical manner. So next one here, downtrend reversal signal. I think I've already spoken about that one. You can clearly see what happened there, where I put the arrows. So it's just showing us some trend reversal. So look at what happened now. This is the previous slide where I highlighted that. You can see that gravestone doji. So look at what happened now. Price started going right down. So there you are. Price fell. They took it up to like 13.5 or something like that. Now it came back again to like 5.1 cents. So if you didn't sell, then there you go. You'll be stuck. So you need to know your charts, right? So next one, I know you may say, but okay, because here we've got some you may think, okay, it's supposed to go up, the butterfly doji there, but then how come the other one it went up, the other one it went down? So you just need to wait for confirmation, because this helps. If you wait for the confirmation, it may help. If you see the red next candle is green, you may want to buy. Sorry, the next buy is green, you may want to buy. If you see it red, you may think, I'm just going to exit. So some people wait for confirmation. So yeah, this is just an example of more candles. Sorry, not candles, sorry, confusing you again. This is just an example of more bars, right? So you got bars. So yep, at the start, as you can see, high volume, green bar, goes up, comes down. Now you can see the volume is even diminishing at the bottom. You can see there's a lot of indecision going on there. And, traders are not either buying or selling, or just a little bit of volume is being traded, really. So this is what this chart shows. At the beginning, the volume was quite there. Then later on, not much volume going on. So now we've got, I've added a MITRE B's photos here from Twitter. So this is from MITRE B. So kindly follow MITRE B at Moolah Land. So if you want to make some moolah, this is the person you need to follow for open, high, low, close bars on Twitter. So follow MITRE on Twitter. So this is Keres of MITRE. And here we go. So sometimes you want to wait. So don't rush, just wait. If you want confirmation, you can see there you've got some bars and supply. When it started there at the beginning, high volume at the beginning, you can see some buying, but it seems it was heading down despite the buying as well. And then you can see eventually still more volume coming, but it's still trending down. So you need a bit of some confirmation, so you can see eventually when the volume, still some high volume dipped, and then the volume started picking up again, the stock started coming up. You can clearly see that on the bar chart. And then you've got here another thing, which is actually showing the reversal that happened there. So you need to be watching that volume as well, going up, and then now the volume is diminishing, stock starts coming down as well. So you need to actually be looking at this, and there's no volume there. and some people are still buying, but it's been sold down. So you need to be actually looking at that. So there's some further confirmation, that there's a huge supply right there. You can see the volume bar. So you need to be looking at this. So if you look at these patterns clearly, you can learn quite a lot from that. And then the next one, you can see here, volume again, 1, 2, 3, your volume. You can actually look and see what's going on up there at the beginning. But it was bought up on high volume at number 1, and it was sold right down. Volume diminished again. Traders going back and forth. The volume came back again at 2, and it went up slightly. They dipped it right down again. Volume diminishing again between 2 and 3, and then volume came up at 3, and they pushed it right up again, and then volume diminishing again, coming down. You can see they were bringing it down again. So you need to know this, and where you're going to trade. So you can be looking at this, think I'm going to get in there, exit there, that sort of thing. So you need to be looking at this, and don't forget to look at the volume. And then this third one again here, you can clearly see what was going on with the volume increase there. Stock was going up at 2, and then some sellers started coming through. Volume had dipped again, so it's starting to go up again to 3, to A. They took it right up there. That's A. Volume is up. They're buying the stock. You can clearly see that. And then there's some reversal. Big seller came through just after A there. You can see we were having higher highs and higher lows. But then now, look at that. We've now got a red big bar there. And price started reversing a bit, and volume started coming down. So just carrying on like that, you can read that. So at C, there was no volume whatsoever there. And then you can see at D, price is being brought back down again. Not much volume going on there. So you need to actually practice. You'll soon be able to spot the potential bullish, the potential, a bearish action. So you need to be just looking at that, looking at the volume as well. So this is the purpose of this, this slide here. So you need to look at this, clearly. Price kept being slammed lower, giving you a warning, that the tide is changing. So you need to be looking at these closely, So just look at this, because most of the times retailers try to raise this price up, and they, it doesn't go that way. Yeah. So look at that, price dropping. Big boys come through. They play around with your brain. So you just need to look at these closely. Right, okay, so this is the end of the presentation. So what have we learned today? You've learned to read charts, candlesticks, open, high, low, close bars, bar charts. And also you need to read the news, everything around you. Just learn to read the news. And as well, never get pumped into buying a stock. Look at your charts. If you don't want to look at your charts, it's fair enough, fine. Use your FA, that's fine. So as well, this will just help you to stop panic selling. No fear of missing out, because clearly you can see what's going on. So you can follow Vonsi on Twitter, follow Maita. Maita is very good at these open, high, low, close charts. So you can follow that on Twitter, and Maita as well. I've written there. If you can copy that link there for Maita, because there's Maita B Mulaland. He's got some rambles there where you can see more charts for the open, high, low, close bar charts. So I'll leave that on there for a few seconds. Go follow Vonsi. Remember as well, this is a battle between the buyers and the sellers, the bulls and the bears. So you just need to remember that. That's what it's all about. So all those charts you see is just the fighting between the buyers and the sellers. So follow Maita, follow me on Twitter, subscribe there if you want to see more videos coming, because that's the only way I can know that people are interested. So that's your trader, Vonsi with Traders. Thank you, everyone, and hope you have a good day. And just enjoy your trading. Happy trading.